Hello guys, today we'll analyze the stock of Indiamart Intermesh Limited. Now many of us might have used the platform of Indiamart, which has converted the traditional marketplace to online marketplace. It serves both buyers and sellers. For buyers, there is the option of posting a quotation or searching various products. They can see various suppliers, and when they put a quotation on their platform, IndiaMart helps them with their AI driven enrichment to match with the right kind of supplier. Then it facilitates the buyer and seller interaction, and they can interact and make a deal. Sellers can manage leads, they can have a view of all the leads, like thousands of leads they'll get around various cities in the country. So there is something for both buyers and sellers. So this platform serves various services to buyers as well as sellers. Now, what kind of products are available on this platform? Now, it is not like only the final product will be available on this platform. Even the raw materials, components, and other spare parts. So every type of product is available on this platform. We can see that it has 97,000 plus categories of products. Now let us have a look at the fundamentals of the stock. The market cap of the company is around 27,000 crores, so we can say that it is a mid cap. The current price is around rupees 8,881. It has a dividend yield of 0.17%, which is not huge. The face value is rupees 10 and it has generated 86% returns in the last 1 year. But the PE ratio of the stock is 92. When we compare it with the industry PE, it is around 86. So we can see here the PE ratio of the company is just slightly more than the industry, so not very premiumly valued. But return on capital employed is 39% and return on equity is almost 30%. So return ratios looks good. But more importantly, this debt to equity ratio is just 0.04. So company is almost debt free. The company has nationwide sales and presence in 1,000 plus cities in the country. 33% of the buyers are in metro cities, 26% in tier 2 cities, and remaining 41% in rest of India. While how does the company earn revenue? So they have a subscription model where suppliers have to pay some subscription fees to have access to their services. So 57% of the paying subscribers are from metro cities, 16% from rest of the India, and 27% from tier 2 cities. There are 6.6 million suppliers and 38% suppliers are also buyers. So this means that suppliers have a lot of trust over the platform, because of which they are also buying from the same platform in which they are selling. 131 million registered buyers and 55% of them are repeat buyers. So more than half of the registered buyers are repeat buyers. So this helps in increasing traffic and is good news for the company. And 6.4 million are free suppliers which are using the freemium model. So just now we saw that they have total of 6.6 million suppliers, but out of them 6.4 are not paying. This means that only 3% of the suppliers are using the paid subscription version. So it is another positive for the company that they have so many else suppliers to cover, from which they have to gain more revenue, and along with it they can also add new suppliers which can use the subscription model of the company. So this will help in generating more revenue in the future. In the last few years, paying subscription suppliers have increased at a CAGR of 16%, which is another good rate. We can also see a good growth in the registered buyers and a CAGR of 33% in the last few years. Even the traffic has increased by a CAGR of 30%. So company is showing massive signs of improvement year by year. Now, IndiaMart also focuses on constant innovation. We can see they bought the quotation feature in 2009 only, and in 2021 they are now focusing on the logistic solutions which have remained a challenge for the company, but now they are working on that. Along with it, they have combined the tele feature, mobile accounting, tax, invoice, payment program, and many other things also. If we look at the shareholding pattern, then 50% of the shareholding is with promoters, while others have 15%. Mutual funds, alternate investment funds, and other institutions have 5%, and foreign institutions have 30%. So, such high holding by the foreign institutions is another positive for the company. Now, the long-term opportunities for the company are the accelerated internet adoption. As the company operates in the internet space, they have application websites. So yes, if internet adoption increases, so will the demand for their services. Openness to online and telesales and make in India push also. The enabling factors, the one thing very important about the company is that they can operate on negative working business model also, because they do not require large fixed assets or raw materials. They are just a platform connecting buyers and sellers. They have strong balance sheet with zero debt, diversification across categories and geographies, and they have good brand awareness also. If we see at their QY FY22 results, we can see that there was a improvement in revenue by 19%. All these figures are year on year. Now EBITDA margin is 49%, guys. Just see the ratio, 49%, just 1% less than half, and it has improved by 21%. There is a jump in net profit of 19% and even in cash of 154%. So again, stellar figures by the company. Now, if we see the EBITDA in the last few years, we can see that in FY16 it was in loss, but in FY17 they decreased loss, and then in FY18 they made the first profits for the company. Now, same thing people are expecting for Zomato, and since then we can see company has only increased profit. As we discussed, that company has good returns ratios, but current ratio is also 4.4, another good sign about the company. In the balance sheet, we can see that reserves of the company were in negative in the few initial years, but then company started making good profits and there is an improvement in reserves also. In FY21, reserves have jumped massively. This is another good sign, because as a shareholder of the company, reserves are very important, and in future good reserves might result in bonus or split of the share. Even there is good improvement in the investments of the company. Also guys, if you found the content helpful, then please don't forget to like the video and subscribe to this YouTube channel, and you can hit the bell icon for being notified. Now this is the chart of Indiamart Intermesh on a 1 day time frame. Now there is one good support for the stock at the level of 7,000, and we can see that recently stock was trading near this level also, but then it gave a good rally in the past few days. Now there is another good support for the stock at the level of 7,700. So I think if someone wants to make a fresh entry in this stock, they should wait for the stock to come at this level. If there is some correction in the stock, then this 7,700 would be the good level to enter in this stock. While if someone is already invested in this stock, I think they can continue being invested. Stock can face a resistance at the level of 9,300 to 9,000 is another supply zone for the stock at which it can face resistance. So guys, this was all from this video. In the comment section, you can let me know if I missed any important point about the company, and please don't forget to like and subscribe. Thank you.